Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market. Congrats to the bulls out there today. Big day. So let's go over a little bit of play-by-play on how recently has played out. We had the pullback. We anticipated that the low of August would hold at least the initial test. We bounced. We anticipated a daily lower high would form because of how much we had pulled back. We also anticipated that a daily higher low would form because of how big the bounce was. We got our daily higher low. The trend changed. We've now seen another little quick higher low from yesterday at 295.57 and then continuation of this move. So we zoom out to the weekly. We are still in an equilibrium, but we're looking up at that all-time high resistance, and we're currently where we closed today. We are what, $4, less than $4 from an all-time high. And how far are we above our last support level? The answer is $14. So much closer to resistance than support. We're about to head into earnings season with the financial sector this week. Netflix is on Wednesday. Netflix will see the tech sector react to its earnings. And then we have the tech sector earnings. In my opinion, we're either going to see an all-time high or we're going to see a bearish reaction to tech sector earnings and stay in this weekly equilibrium until the FOMC at the end of the month. So the bulls are comfortable in that regard, knowing that even if we fail the all-time high, we can pull back multiple percent and still just be looking for a weekly higher low. Because again, the weekly higher low is what matters to me. We can pull back over 4% and still be holding that support. So bears are going to be saying that the market's rigged, that the data, the financial data, they will be right eventually. We will break this weekly uptrend eventually, and the bears will be right. But they're not right now, and we're sticking with the trends in our favor. And we can say on the daily chart that anything above 295.57 is a daily higher low. And if we lose the daily higher lows, anything above 284.82 is a weekly higher low. So the burden of proof has and always will be on the bears as long as we're in a weekly uptrend. And they're not proving anything to us, so we're keeping an eye on that all-time high. Sector today that we haven't been covering much of, but the semiconductors. Look at this weekly chart. Just a clear bull break, and now we're in blue sky breakout. This is SMH, looking at SOXX. Similar pattern without the break just yet. But if we break 221.31 and get in the clear, there is a lack of resistance in blue sky breakout. So that's one factor. Of course, the financial sector and the tech sector will have bigger implications on the broader market as a whole. So their earnings are coming up, but we'll see how those earnings go. IWM. So IWM on the daily time frame getting a bit more follow through from its daily trend change. We know it's been the weakest market comparative to everybody else that we look at for quite some time, but it's still in a weekly equilibrium, just like SPY. Weekly higher low has been set. We're looking for a lower high to be set compared to 158.92. We are much further from a bull break on the weekly here than we are on pretty much everybody else that we're going to look at. QQQ, daily follow through, and we have a little higher low at 190.65, hardly even a daily higher low. I would still consider personally anything above 185.27 as a daily higher low. But bulls have their sights set on resistance. Weekly resistance is 194.71. We got within 74 cents of that resistance level today, and then the all-time high is right behind it. Entirely possible we still reject from these resistances. We are a bit overextended in the short term. If we do, weekly equilibriums continue until the FOMC at the end of the month. XLF, bullish continuation, big green day there today. Weekly resistance approaching 28.67. Again, entirely possible that we form a weekly lower high. The bulls are not in the clear. All the bulls are doing is giving themselves a lot of space to work with. We're not breaking key resistance yet on the longer term time frames, and it's the longer term time frames that have been guiding us for the last few months. Biotech follow through after a lack of follow through with upper wicks the past couple of days. This is a welcome sight for the biotech bulls, keeping in mind that anything under 84.12 is just a lower high, and we're in a weekly downtrend, not an equilibrium. Big difference between XBI and QQQ and XLF and everybody else that is in a weekly equilibrium. So we are just looking for a weekly lower high to be set, but at least the bulls are fending off the potential of a bear flag. XLV is similar. XLV dropped to a weekly lower low. no bear follow through, and now we're looking up at make that 92.43 resistance. Anything under that is a weekly lower high. So we're going to be watching all these names for the rest of the week and see if a couple of them can start to break resistance, which will increase the odds that everybody can break resistance, or if nobody breaks their weekly resistance, weekly equilibriums continue. The VIX here is dropping back down, 1330 in play. I would be surprised if 1330 breaks convincingly from here after such a significant pullback. But again, the weekly time frame, just with our low, high, considering this a higher low, lower high, and trying to hold a higher low here. And as soon as we lost that daily higher low pattern, bears ran with it. That happened at 1640. Here we are down at 1350. If we're looking at TVIX, and if you short TVIX on the loss of the daily uptrend, that happened at 1346, and here we are down in the 11s. So from that signal, we're down in just 3 days, 20%. Gold, struggling with the market strength. Again, all I care about for gold is the broader range, which we are still well within. Anything inside this range is choppy to me. So I'm just waiting for clarity. I'm not doing anything. I haven't traded miners in a while, focused on other things. And until we get more clarity on gold with this range, that probably won't change. Silver is holding the daily higher low, but just barely. That support is now in play. And GDX got a bear break, a convincing one. So GDX, the must-hold level was 26.51, and we obviously did not close. Look at the red Maribozu, 2 out of the last 3 days. Did not hold that level. We followed through for the bears below that level. The lower high, lower low pattern continues, and we have dust breaking bull from its equilibrium. Bull break over 856, 866 is next, but high, low, lower high, higher low, bull break. I would have preferred a lower high and a tighter range. We didn't get it. Trade did not come to me, so I don't take the trade. And again, it's fine because I'm trading plenty of other stuff out there. Don't have to rely on the gold sector. It's good to focus on sectors, but once you get real comfortable with charts, you can be all around, and just the trade didn't come to me, so I'm not going to take it. That being said, I will be interested in the miners for an oversold bounce tomorrow if we start with a gap down open. Hourly RSI at the end of the day, low 20s, 4-hour RSI, just oversold. If we were to start with a gap down open, we would be hitting some extreme RSI levels on those shorter term time frames. Keeping in mind that we are looking, let's go to GDX with no time decay, but we are looking for monthly higher lows. Anything above 2014 on GDX is a monthly higher low. And we're looking for monthly higher lows in gold and silver. It's just we're not confident they've been set yet. So still worth keeping an eye on the bull miners for their monthly higher low, but bears full control of the short term. Oil, daily higher low still intact. This is an important factor to me. If oil were to break 50.51 and the S&P 500 would still be all sunshine and rainbows for the bulls, I would start to be a little concerned, because if oil breaks 50.51, it is a long-term technical bear break, which can have ripple effects into the broader market, in my opinion. Anything above 51.39 is a daily higher low. If we lose the daily uptrend, which isn't much of a daily uptrend, if we lose those little higher lows, it's a weekly bear flag. And then we're heading down to 50.51 if that's the case. Nat gas. So here's another one. If the trade comes to me, that's great. I will take it. But if not, no biggie. I'll trade something else. Left shoulder, head. If we cannot break 2384 and we reject here, we're about to test it. But if we reject and have to pull back for a daily higher low, I'll be interested in that daily higher low for a play off of 217.8 support to then be looking for the daily trend change. If we just see a bull move continue, I will miss it. And that will be just fine. It's not the trade I'm looking for. I missed the weekly bull move. I was looking for an inverse head and shoulders on the weekly time frame. We didn't get it. So I could look at that and say, oh, I should have done this or should have done that. When in reality, I was day trading and short-term swing trading and making money elsewhere. Could I have made more trading this play? I don't know. I don't care. It wasn't the trade I was looking for. So again, having that I don't care attitude of missing trades is really important, in my opinion, to do this consistently every day. Because if you're confident that you'll just find another trade in the next sector or on the next setup, then you prevent yourself from taking poor risk to reward setup trades. So it's all about 2384 for natural gas. And we'll see you tomorrow. Have a good rest of your night.